I would say this topic that we are discussing today is really very much relevant because as it transpired from the previous discussions, in emerging and transitioning economies, the reason why businesses have limited access to finance is not because the lenders have limited liquidity or capital. The problem is rather informational. And what I mean by that is especially relevant for the small and medium enterprises, micro enterprises as well, startup companies, self-employed entrepreneurs, formal, less formal or informal businesses. And the problem is that the lenders actually are not able to properly assess the credit risk and respectively price it. And what happens is that lenders typically either would reject the credit application or will impose excessive collateral requirements or will elevate the risk premium to a level that would not be affordable anymore for the businesses. And then this turns into a reinforcing, self-enforcing exclusion. The businesses cannot get credit in order to build credit history, and because they cannot build credit history, they cannot get credit. Today, on the occasion of the 10th anniversary of the Kosovo Credit Guarantee Fund, and also very much provoked by the discussions that we had until now, we would be discussing the topic, can data and technology transform the access to finance in Kosovo? We will touch upon also how can we build upon that data and potentially power a national level rating system. Is that relevant at the current moment for Kosovo? And just to introduce myself, my name is Dejan Ivanov. My typical occupation is I serve as a Chief Risk Officer and member of the Management Board of Raiffeisen Bank. But today I'm extremely privileged to moderate that interesting discussion and therefore invite on the stage the panelists, Mr. Visar Pačarada, the CEO of ProCredit Bank, Mr. Adrian Alo, the CEO of KEPtrust, Mr. Blerim Terzici, the head of Banking Supervision Department of the Central Bank of Kosovo, and Mr. Mentor Husseini, the General Director of the Tax Administration of Kosovo. Now, one small technical announcement for the later part of our panel discussion. Towards the end, we have prepared a small poll survey, which you would be able to access through the QR code on the back of the booklets that have been distributed with the agenda. I think we would show it also later on the screen. I kindly invite the audience to participate in that survey. I believe it would be re-engaging for you, and we would be showing the results on the screen as we are collecting the answers. 5 simple questions, but I believe very much relevant for all of us. Thank you. So, my first question would be to Visar. Financial institutions in Kosovo, in the process of credit approval, can verify different data about their prospective borrowers from the public systems. However, this is based on individual inquiries, individual logins, and then typically the credit analysts or risk managers are manually transferring the results of these inquiries into the proprietary credit systems. The problem aggravates later on upon the annual review of the entire credit portfolio when every bank, as part of the prudent risk management, is aiming to update the borrower's information, get the up-to-date information about the credit exposure of the borrowers, and also ideally the risk classification in the Central Credit Registry. The problem is that all this is done manual. So Visar, as a manager of one of the leading banks in Kosovo, how significant is this problem for you? And if you would have a better access, automated access to the public data sources, how would this improve the efficiency of your decisions?
Thank you, Dan. Well, it's definitely a topic that we've been eagerly waiting for quite some time, and it's a pleasure to be there and also address this issue. Before we start, just allow me to briefly congratulate on 10th anniversary of KCGF, and of course congratulate Besnik and his team for the impeccable job that they've done over the years. And I think we've seen this morning the impact is definitely undeniable, so well done and congratulations. Coming back to our topic, as you rightly pointed out in your intro, when you introduced all the panelists, we'll just echo what you've said and also echo what the governor has said this morning. Yeah, the banking sector is very stable. It's sufficiently liquid and well capitalized. So for us, the constraints is neither the capital, neither the liquidity. In fact, is lack of information, lack of structural and granular information and access to such information. So on that note, what you just mentioned. I will just give you a very simple example, just for the illustration purpose, and I will really invite you to do this as well. Just try and Google down what is the total number of active as MSME clients or as MSME customers in Kosovo. I think depending on what source you click, you will get completely different numbers. So the most simple task can become very daunting, and let alone if you try to attempt and do market studies, which of course we've attempted, and very often you will get half-complete, insufficient reports, which may lead towards the wrong conclusions. So the situation is, in fact, yeah, it's not at its best, let me put it this way. Not because the data does not exist, it's simply we don't have access to it. Now, coming back to your question, I will try to separate these, your question into two areas. One from the financing perspective. What is the primary source of getting financial data and other following data that needs for financing? As ironic as it sounds, in a country with 99% internet penetration, with the youngest population in Europe, and yeah, let's not talk about transactions via e-banking, which are 99%, the primary source still is our customers. So we ask our customers to provide us with financial data and with all the following data. And typically they would either have a financial department, and then through them they will either print it or send it via email, or they would have an accountant somewhere who, by the way, he will also keep the bookkeeping of other 100 companies there, so until the time comes, so certainly this would not be in his priority, and then provide us with this data. This highlights a structural issue when it comes to informational access. The second alternative, which is very, very limited, is the Council of Financial Reporting, which all businesses with turnover of over 700K yearly and more than 10 employees, they're obliged to publish the financial data to the Council. And I think last time I've checked, it was roughly about 350 businesses which they declared financial statements. So of course, very limited pool. And even if they do, this is in PDF format and not structured. So as you rightly pointed out, we need to manually extract that information and then manually input this into our own systems and eventually come with a final conclusion. And why is this important? Why am I highlighting this? Simply, what are the drawbacks? What is the actual impact of such lack of access? It's definitely it prolongs the time to yes, or the processing time, into days, weeks, and maybe even worst case scenario, even months. And in today's environment, with prices fluctuating on an hourly basis, I don't think this is very feasible for businesses to wait weeks and months in order to get access to liquidity. This is one thing. The second is, because it's manual, it's prone to errors, human errors, and eventually come to the wrong conclusion. And because it takes so much time to validate the data, instead of advising businesses, our analysts, that they spend, the cost of the loan increases, and eventually this cost will have to be shared with the businesses. Now imagine if we have access to data through APIs, and not only to the tax authority. I'm not trying to put the director of tax authority under the spotlight here, but I really much welcome that he's here and shed some more light. But of course, in the Agency for Business Registry, Customs, and various public institutions, which they hold crucial data, and to give access to it to the financial sectors, and maybe even to the other stakeholders who need such data. So if we had such access, the time to yes would significantly be reduced. So businesses would have access to finance much faster. The cost of loan will be significantly reduced. And of course, at the end, this will affect the pricing as well. So this is from the financing perspective. From monitoring perspective, I would say that the situation is even more discouraging, I must say. Simply because this time round, businesses do not have any incentive to bring the financial data for monitoring purposes, which we are legally obliged to do. Simply the regulator asks us to monitor exposures on a regular basis, so we have early warning systems and we can act accordingly. So very often we either get the data too late, and sometimes even omit it entirely, unfortunately, and that's why the banks need to set aside certain amount of provisioning just to make sure that if, in case something goes wrong, the provisions are there. So imagine this money can be used for financing, for a better purpose and more efficient in that sense. And yeah, why is monitoring important? I think it was mentioned by the colleague from CODIT as well. So of course we want to be proactive rather than reactive. Currently it's backward-looking, not forward-looking. So obviously we can restructure much faster in order to avoid defaults of potential businesses. But also by monitoring on a regular basis, you can also extend credits without the need of administrative burden to go through the financial analysis again. So businesses will save time and money as well and have faster access to liquidity. So all of these factors should be incentive enough even for the less formalized businesses to get into the system and get more formalized. So the importance of having such access is absolutely crucial. And yeah, as a conclusion, I would say it's not only to increase efficiencies, this is for sure, but also how fast do we lend, to whom do we lend, and how much we lend. So it's access to financing as well.
Thank you, Visar. Very relevant points, and we would dive deeper a little bit on them. But now I would address my next question to Adrian as a representative of a microfinance institution sector. The MFIs are operating basically at the frontier of the financial inclusion. You're serving borrowers that are rather informal. We have to name the elephant in the room. And their financials are hardly verifiable, if at all they produce financials. And because of that informational asymmetry, and also the specific business model of the MFIs, the problem is even more aggravated because you have smaller capacities, less technologies, smaller staff as opposed to the banks. So for you, the operational burden is even higher. Would you share that view from your perspective? And if the access to data would be enabled, public data would be enabled for the MFIs, would that make a difference in the speed and quality of your own decision? And how would it affect the access to finance for the customers that you are serving?
Thanks. Thank you. I mean, I can only agree with the intro you gave through the question. So MFIs are working on the frontier of the financial inclusion. We serve the underserved. We serve the clients which are usually informal with very limited financial statements, or those that need to be validated and gone through. So it's more a relation relation that we rely on, and this brings this brings us to the model that is labor intensive. So now, going back to the asymmetry is even more, I would say, emphasized in our business model. So if we would have access to public data, publicly available data, structured through the APIs as mentioned earlier by Pisar, this would improve our decision making, our credit evaluation, and technically we would be able to serve more clients quicker and bring better decisions, in the sense that good clients with potential to grow would be served, that otherwise we would be questioning whether to serve or not. Beyond that, since we are serving clients that are not technically bankable and that also may pose issues with compliance in terms of know your client principle, access or quicker access to publicly available data would enable us to quicker onboard the clients, to have validated data in terms of know your client, and this would improve our compliance as well. So it's not only decision making, it would bring those clients to be compliant and even promote, I would say, a responsible behavior from those clients, which then would result, as Visar said earlier, to them gradually going into the system, being more formal, declaring more taxes, and so on. So this would be the second advantage which we evaluate would be important. And at the end, this would, I mean, access to data would improve our internal capacities and internal efficiency, because we would then slowly, gradually move from labor intensive and then the relationship evaluation of credit applications to more scorecard and model-based evaluations.
And essentially, you would have a capacity to
To
expand
serve
your
more
outreach.
clients. Yes, yes. This is the end result. More clients and better terms for those clients. That would be the end result.
Thank you. Now my next question goes to you, mentor. And as Visar also mentioned, the fact that you joined this panel discussion, as it probably would transpire, I am building certain expectations from the private sector towards the public administration. And this is for a reason. Kosovo Tax Administration, I think we can confidently say, collects and hosts one of the most comprehensive and rich data sets in terms of business financial performance, from the VAT turnovers, income statements, detailed income and expense information, loss figures, etc. And I think it's clear that that information is one of the key in the credit decision process. However, as it was outlined earlier, the information currently is mostly accessible to individual inquiries through the web portal of the Kosovo Tax Administration. So, from your perspective, what is the institutional willingness on the one hand side, but also the technical readiness of the Kosovo Tax Administration to open up that data to the private sector, and in particular to the finance sector?
Thanks a lot. So I'm in the middle of banking sector as a tax administration here, so it means that I have to talk a bit more than you guys, huh? So honestly, I will try to be short. So regarding to willingness, to your question, so tax administration, we can say that it's ready and willing to share this information, because we have been doing for a long time with the public institutions such as Council for Financial Reporting, Ministry of Finance, Custom Policy, Prosecutor Office. With all these institutions, we share this bunch of information which we collect during the year. Just to emphasize, we collect around 4 million declarations during the year. As you mentioned, it's the richest data set in Kosovo. But there are mainly two preconditions in order to share this information with the private sector. Based on, in our law, tax administration and procedure law, I recall the Article 66, which emphasized that tax administration is not allowed to share this information to private sector before having a consent on it. So what we can do in this regard, banking sector, while upgrading their own information, they can ask for this consent, and later on we can see that we can share this information. And the second part is technically. So I mentioned that we have a legacy on sharing information, and in this regard, we have established different API for all these institutions, which the same practice can also implemented with the financial sector. We can tackle in two sides. One part we can do it with the Central Bank of Kosovo when the commercial bank can have direct access on it, or we can do it with each private institutional when we can share the information from the tax administration, but at the same time we can collect some information which has been stopped by the Constitutional Court in our law, which was foreseen that the commercial bank would send the tax administration in monthly basis in this information. So in our perspective, it's kind of win-win situation. It's not that only tax administration is contributing to administrative burden reduction or increase in efficiency to the commercial bank, but also it helps us to make different analysis because we use this information, around 20% of this information which we collect. 80% of them we send to other institutions, as I mentioned, to the Prosecutor Office, FIU, Custom, Ministry of Finance, Ministry of Justice, and things like this. So finally, we can say that, okay, we are willing to do it, only we have to find a way to have a prior consent to the clients or to taxpayers, how we call it.
I think we are starting on a very positive note here. And what you mentioned about this cooperation, we would build upon that a little bit later on the next round of questions, also very interesting topic. Now I turn to Blerim. Blerim, Central Bank of Kosovo, and especially the Banking Supervision Department is at the center of the Kosovo credit data ecosystem, because you are hosting the Central Credit Registry of Kosovo, and in your capacity of a banking supervisor, you're also overseeing the lending practices of the credit institutions in Kosovo. And while on the one hand side, as it was already outlined by Visser, banks are interested in continuously monitoring the overall indebtedness of our borrowers towards the entire banking sector, entire financial sector. I assume the very same interest is also on the side of the central bank on a system level. So my question to you is, to what extent the problem that we formulated, that the credit institutions need access to large volume of data in an automated machine way, is also applicable for the Central Bank of Kosovo?
Yes, thank you very much for the question, Dejan, and thank you also for the invitation, and it's a pleasure to be here, and congratulations on the 10th anniversary of the Kosovo Credit Guarantee Fund, and we commend Besnik and his team for the excellent work over this 10-year period. Also, the supervision of the banking sector in Kosovo is becoming more and more data-based. So with the time, the quality of the data will be higher, and also the data will be more quickly available. Also, the technological developments are being integrated into our daily supervisory activities. So I think that through digitization and automation, also we will basically the efficiency of the internal processes and these interfaces with banks will increase. We are in the process of reforming our supervisory reporting framework and align it with the EU, such as COREP and FEREP. So it will basically quadruple the reporting data to the central bank. So starting from, it's quite ambitious, starting from 2027, the banks will have to report with a new reporting format. However, it will be a transitional period and having, let's say, report on a parallel, let's say, old versus new. We are further improving, let's say, the coverage, also the granularity and timeliness of the borrower-related data. As you are aware, we have already revised our credit registry Kosovo framework by enhancing data requirements, which include also the borrower indebtedness, such as debt service to income ratio, then the leverage indicator, debt to EBITDA. But this was more with a view of supporting forward-looking supervision and from the, let's say, macroprudential decision-making. In this regard, in terms of the banking supervision and the banks, we share, let's say, an interest in understanding the borrower indebtedness and also repayment behavior. But still, our data needs are similar in nature, but not in depth, let's say, frequency and also the purpose. So as you are aware, for instance, the banks, they require more transaction-level, borrower-specific data, be it for credit decision, limit management, IFRS staging, etc. And we require more on aggregated level. So, but we would welcome, of course, the opportunity to access these external databases, as like you mentioned, for instance, tax authority. However, we would not consult such databases, let's say, with the same frequency or level of granularity. We rely mostly on the supervisory reporting framework. We would, let's say, access only for thematic reviews, on-site examinations, or specific, let's say, investigation. You mentioned the credit registry in terms of the technical integration of CRK with the bank's internal system. This is in principle feasible, and we can commit from the central bank that we are technically, let's say, capable and institutionally open to enhance the use of CRK by banks, including for the early warning system purpose.
Thank you, Blair, and that sounds great because I think all responsible credit institutions in Kosovo are aiming to integrate exactly the early warning signal systems with the credit registry data in order to fetch automatically the signals about overall exposure to the banking sector, the risk classification, etc. And that would simply contribute to the entire resilience of the financial sector. Thank you very much. I'm moving back to Visar. Visar, I think you emphasized clearly the significant efficiencies that credit institutions can gain by having machine access to the broader public data. But looking beyond that, what impact that stronger credit data ecosystem may have on the access to finance? So to narrow or to shift a little bit the focus from what we gain as financial sector to what can the public actually get out of it.
Yeah, thank you, Dan. I will just pick up where I left off. Efficiency gains, they are definitely there for the banking sector, for the financial sector in general, but also for businesses. This is already established. But I fundamentally think that this will change access to finance if we have massive access to data at all times, having in mind the legal constraints, obviously. Why am I saying so? Well, in general, banks hate uncertainty. And I think we've seen a presentation today from our Finnish friends when uncertainty at the global level is increasing. And add to that the lack of information. So this is magnified to a completely different level. And as soon as banks are faced with uncertainty, yeah, ultimately, instinctively, you ask for more collateral, higher pricing, reduce credit limits, et cetera, and maybe even reject credit limits. So why am I arguing that this will increase access to finance? I generally believe that there is a pool of businesses. I call it a pool, but I think it's more than a pool, if not more than half of the businesses which do not go through the financial sector, meaning that they are not credited, depending on which stats you're looking at, of course, that is. And startups, young entrepreneurs, businesses which never had credit before, even businesses on the borderline of formality. This makes a very large pool which is completely untapped from the economic perspective. I'm not talking from a banking perspective. So it's a huge potential to unlock if we manage to have access to such data. Banks can monitor their sales, their expenses, investments, payroll, seasonalities, and they can be more innovative and be more forward-looking, such as cash flow-based financing, for example. And this is one part of it. But the second part, I will come back again to monitoring, but not individual exposures. I will talk more from segment monitorings, because this is very crucial. Each bank has an internal system, a warning system in a sense, and makes decisions accordingly. So, and each bank populates their own systems with the existing customer base. Imagine if we have access to sector data, not necessarily individual data, but sector data. You can build a more robust models. So the trustworthiness of the models increases. And once you have a better predictive models, the uncertainty will decrease. And with the uncertainty decreasing, eventually the price should decrease. And collateral requirements would decrease. And add to that the pool of the businesses that I just mentioned to unlock that potential and go through the crediting and develop even further. This will have an immense impact on the economy as a whole. So it's not about financial sector. This is about the country itself. So it's access to finance in the sense. Yeah? So unlocking the full potential of the country. This is the impact. Okay.
Thank you, Visar. And that would relate very well to my next question to Adrian, because I think we have to acknowledge that the MFIs exist because the banks are not reaching everywhere. So the MFIs serve the customers that the banks are reluctant to approach, right? On the other hand side, we are talking about increasing the efficiency in sourcing data, so fetching data from public sources and improving the quality and speed of our decision. Adrian, my question to you is, how could this, because now you have sort of a native competitive advantage coming from your business model, how can your business model be actually affected given the fact that the competitive landscape can shift a little bit if banks would become even more efficient and faster, and their outreach would expand by getting more access to finance? Do you see it as a threat for the business model of the MFIs, or actually it could complement that business model because there is still a significant part of unserved customer base?
Yeah, this is a very good question. I mean, whether it's an opportunity or a threat, it is an opportunity definitely for the MFI sector. I would not call it a threat, but it will be a challenge. I'm not inclined to think it's a threat, because the conclusion is that MFIs are still let's say, important players and important part of the ecosystem and will remain as such. However, this will require some alignment, I would say, an internal, both and external. So, talking about the opportunity, yes, as I said earlier, it will improve our access to data, we will have better decision for clients, we will have quicker decisions to clients, less rejections, more clients to serve, and as a result, we would, as you said, complement to the ecosystem. Now, this transparency, of course, would pose a challenge for us, that some of the clients would be more visible within this transparent and more data-driven market. They would be more visible to the other competitors, others in the market. However, this fundamentally means that we accomplished our mission, because if one client graduates from MFI to a bank, means that we are doing the right thing. That those clients are now bankable, they are in the, let's say, formal economy, and it means that they can grow further, contribute more to the GDP. And in terms of, just to say a little bit about the challenge, not only to Cap Trust, which I'm representing, but also to the sector, it will be challenging, definitely. To align, as I said, it will be challenging. However, we are already being challenged, and we are working, as you said, at this very, very narrow niche of market. Our largest exposure is anyway 25,000 euros to a single client, so we are used to working under pressure and under limits. So I don't see a threat to conclude, but it's a challenge, and in general, I think it will, the more transparency, more access to public data, more machine-driven or model-driven decision-making will only contribute to the overall ecosystem of the financial institutions.
Thank you, Adrian.
And maybe just to add that, again, this doesn't mean that MFIs will be obsolete, that they will disappear. We will still have, as maybe just Vishar said, the uncertainty. There will still be some clients that will be informal, that will be in the very beginning of their ideas for business, so those startups and those small clients will remain in our interest, and we will strive to serve those clients.
Thank you.
Thanks.
Mentor question to you, to continue the point that you made up on your previous response. One of the negative consequences of weak and fragmented public data is that basically it enables the thriving of the informality in the economy. So now I am kind of also giving you the opportunity to name your problem, and this is the tax collectability. So, and you mentioned, you touched upon the possibility of financial sector actually collaborating with the tax administration of Kosovo. Do you believe that there could be a way that by such a collaboration we can actually incentivize the businesses to become more transparent, which would benefit themselves on the one hand side by enabling more precise assessment and respectively faster decisions and better pricing on the risk side, but also would enable you to improve the collectability of the due taxes, and how such collaboration can look like? Thank you.
That's a good question, huh? This is for the tax administration part. Till now you were talking about commercial banks. So the answer is absolutely. So we believe that collaboration between tax administration and financial sector, it helps us to decrease informal economy. But again, I'm going to the precondition. If we share this data with the banking sector, we have to agree that since they start using them, they should decide based on this information which collect from the tax administration, because the businesses will get the message that, okay, whatever I'm declaring to the tax administration, it will be evaluated from another institution. This will intensify them to properly report to the tax administration. And of course, in long term, it will have a huge impact, decreasing formalization and kind of increasing capacity of the tax collection.
Thank you. Blerim, question to you because you also touched upon that point. You said that the Central Bank of Kosovo, especially the banking supervision function, recently made adjustments in the data collected through the Central Credit Registry. You also launched a supervisory review and evaluation process where you are capturing, I would say, very essential borrowers' data, for example, the debt to EBITDA, and also the probability of default and loss given default, so the output of the internal rating system of the customers. What is your view? How do you see the role of the banking supervision and the central bank as a watchdog for the financial stability of the financial sector of Kosovo, publishing at least on an aggregate way? And I am relating also to the point that Visar also mentioned, that banks probably have reached the maximum of value extraction from their internal data, but we are looking for some sort of a benchmark on a national level. So how about, what is the intention of the central bank to publish such at least aggregate data on a sectoral level so that the banks can actually benchmark their internal models and estimates against what is the national view on that? Thank you.
Yes, I mean, in addition to what previously was mentioned, that in terms of the reform related to the supervisory reporting framework, we are also reforming our supervisory methodology by replacing CAMELS with a supervisory review evaluation process, SREP, which is EU based, and this represents more a conceptual shift rather than a small methodological, let's say, update. So supervision is moving from static rating, let's say, to more dynamic and more forward-looking approach in line with the EU. Our executive board already approved the detailed roadmap for implementation of SREP within a 3-year period, so which includes 18 activities, so 2025, 2027. So the systemically important banks, they will receive their SREP letter and with their scoring every year, while the less systemically important banks, or LSIs, how we call it, they will receive it on every 2 years. So from a supervisory perspective, you mentioned that we enhance this data collection. You mentioned that to EBITDA, probability of default, loss given default, also LTV, are initially meant only for the supervisory, let's say, assessment on a system-wide risk assessment, but this will allow us also to identify, let's say, material divergences in risk assessment for the same borrower or comparable borrower, but also for the internal models and provisioning purposes. Regarding publications, so in general, SREP publications are fundamentally supervisory information, so in general they are not published as a score, but because they rely on bank-specific methodologies, let's say assumption, risk appetite, so sometimes it's difficult to, let's say, to have this, how to say, if they are suitable for the direct public, let's say, comparison. So we acknowledge that let's say, the use of aggregated data, anonymized data, of course, it will contribute to the lending practices, but we will therefore consider the potential disclosure of this data if they clearly add value, and also if are methodologically sound, because you have to also be aware of that. So, but in principle, we are in favor of publishing the aggregated anonymized data.
Thank you very much. So at least what I see is that during the supervisory dialogue, at least the banks would be receiving certain feedback based on the information that you would be collecting.
Yes.
Thank you very much. Now, mindful of the time, I would adjust some of the questions, and we'll ask you gentlemen for shorter answers, more concise answers. Let me, Visar, I will turn to you. There was a very interesting presentation by Mr. Kim from CODIT, but I think we are far from that level that we can incorporate. That we can incorporate so wide set of data into the rating systems. However, if we would be aspiring towards establishment of at least a national level rating system, because I know your bank is also using proprietary models, in your opinion, what would be the key prerequisites that we, all participants or potential beneficiaries of that national level rating system, have to meet in order to think of developing it?
Thank you, Dan. I'm wary of the time, so therefore I'll try to be concise. We've seen a very sophisticated model, but that should just, make us more eager to reach that level. We are a young country. We're still maturing as a country, as institution, as sector, etc. But definitely with country with big dreams. We've shown historically that we can do things much faster, and we can be rather innovative when it comes to it. But then we have to go back to reality, where do we currently stand. One thing that all the international scoring models have in common, it's their foundation, strong foundation, meaning strong foundation of data. So what are the preconditions in order to achieve that in the future, be it distant or be it near? We definitely should look in that, but first things first. I think the first thing is data integration, which we've been talking about this throughout this session. So throughout all the public institutions, but this should also be the other way around as well. So the banks should also have availability to share data with other institutions. So data integration is the first precondition. The second precondition is standardization. Data needs to be comparable, and I think it was all early on confirmed by the Korean model as well. And last but not least, which is extremely, extremely crucial, is the governance. Who owns the data? Who oversees the data? Who protects the data? And how reliable is that data? Yes, so in my view, I would see someone like a central bank overseeing an institution, be it public or be it private, but making sure that the data is credible and it's being protected. So in that sense, the users, in this case the financial sector, can use the data freely, but also trust the data. Yes? So it needs to be trustful data. So these are the three preconditions. We're not starting from zero. This is very important to highlight. We have sets of data. The problem is that this is all silos of data enclosed within various public institutions. So we just need to integrate and this interoperability and have access to it. We're not starting from zero, but definitely first things first. So meet the preconditions, and later on we can dream of reaching such credit scoring at the level that we've seen.
Thank you. And Adrian, do you see the benefit of having such a national level rating model for the microfinance institutions? I know you have also a proprietary scoring model, but how you are probably better informed and connected with your peers in the MFI sector. Would that be beneficial?
Definitely, it would be beneficial to have access to the public data, to have the interoperability of the different sources of data. This would bring down and the information asymmetry. So for the clients or the beneficiaries of this, final beneficiaries, the clients of the financial sector, be it bank or microfinance clients, this would mean that they would have a standardized approach to the financial institutions. They would not have to have 10 types of applications or ways, models of applying for a loan. It would be a standardized precondition, let's say, to fill out certain level of information in order to apply. From the financial institutions, again, the standardized coherent information would then allow for what we said, efficiency, more inclusion, and then more coverage of clients. And finally, do we aspire to something like CODIT, if I'm saying the right acronym of Korea? Yes, why not? Maybe not at that level of sophistication, but something that would be a building block for each and everybody across the financial sector. And obviously we can still upgrade and use our own scoring models based on our business model, based on our mission, based on our different risk appetite, but have something that would go across the board and be comparable, and that technically we would speak the same language across the system. And we speak the same language and we get the same response from the clients. So answer is yes, maybe not copy-paste. We cannot copy-paste Korea. We are, I don't know how many times smaller and smaller economy and then also demography, but something that would suit us, not Korea.
Thank you.
Thank you.
My last question to the panel, Belerim, it goes to you, and I'm relating to where Visar finished. Where do you see the role of the central bank if the financial system in Kosovo, the financial sector, would aspire in establishing such a national level credit rating? Obviously, it's not the job of the central bank to develop such a rating model. That should be probably a specialized entity. But still, do you see the role of the central bank, for example, setting the rules that such a rating model should meet, or any other role? How do you see it?
Yes, I mean, there are different models. International practices, they separate strongly between the public, let's say, or credit registries, which are often operated by the central banks or supervisory authorities, which this is the case for Kosovo, and credit scoring or ratings, which are typically produced by the banks themselves or by licensed private providers. So regarding the role of central banks, experience from other jurisdictions, they show that neither extreme, let's say, fully centralized, nor the hands of, let's say, market-led approach is optimal. I think that at national level credit rating system would also support the harmonization of lending practices meaningfully. If it's designed, Visar mentioned some of the prerequisites, if it's designed as a public data and standards, let's say, ecosystem, with a central bank acting as an enabler, then also standard setter and guardian of the integrity. This is the hybrid model which is preferred also by the World Bank and the Bank for International Settlement. So we saw that the countries with strong credit ratings, such as EU countries, but also the South Korea, so they have to have a common, let's say, data infrastructure and the standardized let's say, definition, and they show that let's say, the dispersion of they reduce the dispersion in risk classification. But I think that it will not still, if you establish a national credit rating system, it will not fully harmonize the lending practices, because you have different, let's say, risk appetite, different funding costs, and different collateral policies. But and I think that advanced banks will still use let's say, they will continue to overlay the internal model. So, and just to conclude, maybe also the banking Basel Committee on Banking Supervision, as a international standard setter, also they warn against the, let's say, uniform mechanistic, let's say, the credit allocation, emphasizing that the sound credit decisions still must remain within the individual banks, even though if the risk metrics are basically available.
Thank you. So what I take away from your responses, the time is yet to come to validate the hypothesis whether it would make sense, for example, to develop such a national level rating system, at least to enable the smaller entities that cannot build their own proprietary rating systems to benefit from that assessment, but the role of the central bank would be rather setting the guardrails and standardizing the information set. Gentlemen, with that we finished our main point of the panel discussion. Here I would invite the facilitators that we launch the poll survey. Can we do that? So there are 5 questions, multiple choice. You can scan the QR code. The first 4 questions allow multiple answers, up to 3. 1 is the minimum. And we will be showing the results. There would be roughly 1 minute for answering the question. We would be showing the results after every question. Okay, that sounds like we have a reason actually to act in that direction. Very good. Let's switch to the second question. Let's show the results. Yet another convincing argument why we need to integrate public data. Next question, please. So this question is, what should be careful about when doing it? So what the concerns are. Can we show the results? Fair enough, but as Mentor mentioned, we obviously have to address this from all legal aspects, obtaining the consent from the prospective borrowers to share that information, and also make sure that it is secure. Next question, please. Can we show the results? Very good. I hope they are representatives from the private sector as well, from the businesses, potential borrowers. Great. Next question, please. This question, I think, requires only single answer, so be careful. Let's show the result. I think the outcome very much resonates with what our main hypothesis was, that actually the main advantage would be that it would enable banks at least to benchmark their internal rating models. Very good. The last question is open end. And I kindly ask you with 1 to 3 words, basically, to name what, in your opinion, is the key condition for improving the access to finance. And let's see what the cloud word will show. Let's show the words that are appearing. Data and data access stands out. Thank you very much. Now, to wrap up our discussion, the Kosovo Credit Guarantee Fund was established 10 years ago on the premise that by deploying the right risk-sharing instruments, you can bridge, Besnik, you can bridge the gap between what the customers, what the borrowers are ready to demonstrate and what the banks or the other credit institutions are looking for. And I believe you convinced all of us together with the presentations that you delivered on that premise. Now we move to the next level about integrating data and extracting the best value of that data. So I would like to close our discussion given the fact that I felt that there is a lot of goodwill from our panel representatives, with a short commitment from each of you gentlemen. What can we do? What each of you can do with one sentence, basically, what you can commit on to enable this integrated public data access, and what would you need? That would be the second question. What would you need from another institution to make that happen? Mentor, maybe you would be the first.
Yeah, quite short. As I mentioned, so we committed that we can start establishing APIs, firstly with Central Bank of Kosovo, then later, if it's needed, with the commercial bank, in order to share this information with prior consent from the clients. And what we are asking for, or what we are looking for, is that the same data to be shared with the tax administration in order to decrease informality.
Thank you. Lerim?
Yes, the commitment that we can make today, the central bank is basically committed to continue furtherly the strengthening of the CRK and the supervisory, let's say, data framework in a way that supports the system-wide risk monitoring, comparability, and also financial stability of the sector.
Thank you. Yes, sir.
We as a Although I represent one bank today, but still today I spoke in the name of the banking sector, I can easily confirm that we can provide technical assistance, assistance, people, also regional and European knowledge, because we have banks who belong to groups, so we can offer this assistance, and in return, we want a technical and legal framework to be cleared in order for us to know what sort of assistance to provide. So this is real commitment from the banking sector. And of course sharing data with relevant institutions such as tax administration.
Thank you, and I also subscribe to that. Adrian?
Yeah, although we have a different mission and different, let's say, role in the market, but yes, we commit to transparency. We would do our best and contribute to the overall, let's call it a project. We can also have limited contribution, whether in technical, whatever we can do, let's say, to enable this process. And in return is similar to the banks, transparency, access to publicly available information, and pursue our mission together. Thank you.
Thank you. Gentlemen, thank you very much for excellent discussion, I believe, that we had. And thank you to the audience for the engagement. Thank you.
So in fact there are three. To what extent can alternative data, such as tax records and digital transactions, improve credit risk assessment for underserved MSMEs in Kosovo?
Visser, would you like to take this one?
Understood it correctly. To what extent? Because I cannot read it. So to what extent can...
Mine now. To what extent can alternative data, such as tax records and digital transactions, improve credit risk assessment?
Yeah, absolutely. I think we've been arguing for this throughout the entire session, because once I mentioned startups and young entrepreneurs, obviously we don't expect higher turnovers there, but obviously we can see trends, we can see seasonalities, and this is definitely something which is crucial when it comes to credit risk decision. Having the real tax data, this is very helpful, and this is what we've been arguing throughout the entire session.
Maybe I can also now take this one out of my previous experience, or a little bit, to give a little bit of a background also to the audience. Typically the rating models of the banks are based on static data, at least at the underwriting stage. We are asking for credit financial statements. And as you know, this is a single snapshot, or at least, at most 2-3 years prior of data. But what the digital transactions enable, and actually many of you have heard about the PSD2 directive, Payment Services Directive in Europe, which enables the exchange of data among banks of customers, common customers, so banks can access their transactions in other financial institutions if the customer would agree to. This provides the so-called behavioral data, which traditionally has proven to have a significant predictive power. So it improves, actually, it reduces the uncertainty in the credit decision. And this is dynamic information.
Thank you. So the second, how can banks and microfinance institutions practically leverage data and technology to expand access to finance without compromising risk management standards?
Yeah, obviously we will not, I mean, the entire idea is not to compromise the risk evaluation and to take more risk. It's on the contrary, to let's say, mitigate the risk. To say how, I believe we said it through a transparent process, through more data available, publicly available, and this would, as I said, mitigate the risk and release more capacity for financial institutions to serve the clients. So on the contrary, it will improve the risk profile of each of us.
And the third one, perhaps. When will perhaps for Mr. Husseini, this is more now, the third one. When will the financial statements of all Kosovo companies be publicly available, at least at the same level as in the countries of the region?
Thank you. So there is an article in law which says that only large businesses can make a public financial statement through the Council for Financial Reporting. We have tried as a tax administration in 2017, as I recall it, I was from GIZ perspective helping them, that we have started in Ministry of Trade and Industry publishing these data because the tax administration have all financial statement of each businesses from the zero turnover till to the maximum. So we are ready to publish whenever the law changes, but it's prohibited by the law.
Thank you. So thank you, everyone.